name is Shane. I do the investor relations and events at 10 Capital Network. We're really excited to get the conversation flowing today. This is going to be how an angel group should support its local entrepreneur ecosystem. We originally had Gary Trauner, but he had a last minute cancellation. So Michael Melfi from Taylor English graciously stepped in last minute here. Gary Trauner is going to be doing his session next month, but we really thank him for coming on and being a part of this. So Hall, do you want to go ahead and take it away?
Well, thanks, Shane. And thank you, Michael, for joining us today. We've had you on before and glad to see you back as well. For those who aren't familiar with you and your background, can you tell us a little bit about what you're doing now and what you've done before in this space?
Absolutely, absolutely. Well, anyone who would have Google stalked me or LinkedIn stalked me would see that I'm an attorney by trade, but I've actually had a pretty, I'd say, complete tour of the entrepreneur ecosystem. I have started 28 companies in my career. A third of them went on to be 7- and 8-figure revenue businesses, had a couple exits in there. My biggest one was 150 employees in 12 cities. And so I've been the entrepreneur. I've also, because of that, had the opportunity to be the investor at different levels, either as an angel in some different deals or ultimately doing some participation in some venture deals and venture funding. And I think along the way, I've been the advisor, the mentor. I chose to position myself over the last decade as a trusted advisor, really that outside legal counsel to a lot of the clients. Because at the end of the day, when I sit in that role, I get to help them with a few things. One, I get to help them identify the legal issues and obstacles they're going to face. I get to also help them be able to grow their business. I get to be a partner. When you're in that outside general counsel, it's kind of part advisor, part strategic planning, part fundraising, although not officially a fundraiser, but inevitably that's part of any entrepreneurial growth and journey. But I get to be a partner to that business. I get to help them with certain business development aspects. And lastly, I just get to do that in a really kind of transparent manner where I'm not inside the company, but I'm outside helping them really grow their business. And so that's been the role that I've played most recently in the ecosystem, is kind of that outside general counsel. But I would say over the years, I've had an opportunity to sit in a lot of different seats in the ecosystem on both sides of the coin.
Well, I know you do a lot in the Michigan entrepreneur ecosystem, and you did a great job helping us move into that community. And you have several groups and programs that you were running at the time. But when you're doing that, how do you see your role in the local entrepreneur ecosystem? What are you trying to accomplish there?
Yeah, so I create, when I think of an ecosystem, first of all, I always kind of look at the maturity of it. And one of the things when I was moving back to the Midwest from the West Coast, it was said to me the ecosystems are different from a maturity level. And so always understanding where the ecosystem is important. Not that something that's not as mature is not good. It just will, the factors that play into the ecosystem will be different. Because when you look at it, you got money, you got ideas, you got the support for those ideas, you got the events that kind of bring everyone together, and you have the professional services. And when all those come together, you have something that nurtures the entrepreneurs and their businesses. And so, when I look at myself and I came back here to the Midwest, I kind of saw that there was a few things that were needed. And I really want to see more funding go into companies. And we're going to talk a lot about angel groups, but really figuring out how to get more funding into the different investments and companies. I think the events is an important part. So I've, as you've mentioned, pre-COVID, we hosted a monthly pitch club event where we would bring anywhere from 100 to 150 people together in the ecosystem all around the state. And we would do those events to really help gain awareness, not just for the ecosystem, but for also companies and spotlight companies. So I've done that as well. I've been an author. I've written books that are targeted towards entrepreneurs as well. As you know, I've done plenty of webinars and just really done those things to continue to nurture it. If you think of it kind of like a garden, at the end of the day, the garden needs to be tended to. It needs to be watered. It needs the right sunlight. It needs to be pruned. That's the same thing that I believe as an ecosystem matures, that needs to happen as well. And so, not going to say I am the gardener. There are a lot of gardeners. It's a co-op farm, right? And we all try to do our part to continually to lift up the ecosystem.
So for those very, very early stage entrepreneur ecosystems, and I always know who they are because they say we want to be like Silicon Valley. And I know the more mature ones don't want to be like Silicon Valley. So, but for those who are just starting their entrepreneur ecosystem, what were the core functions you think that people should be doing, investors or startups or other supporters, to foster that community? What are the first 2, 3, or 4 things we should focus on?
I think some people may answer that, like build it and they will come, build a co-working space or put together an event, and that'd be great. I personally think if someone's looking, the funding is the most critical cog in the machine, right? In the ecosystem, is that, can you find people who are truly committed to the funding at the different stages of the companies, right? So we're talking about that seed, that angel investing, early VC investing, maybe moving up to the late stage investing. But as that gets further along, the money will find the good deals. So really those early deals, there's got to be plenty of money to get the machine going, in my opinion. I think it also helps those regions and areas that have some grant funding, non-dilutive grant funding from different resources can be helpful as well. Because I think, as you know, the hardest part of taking off an airplane is the takeoff. It's not flying the plane. And same thing with a company. That early part is when they burn the most resources. They're making the most learning lessons, when they're having the most new things going on. It requires the most resources, which it usually tends to be a lot of investment in those companies to really get the companies up and going.
Great. And for those who are in the room, if you want to post some questions in there, in a moment we'll unmute and show our video, and we can actually turn it into a dialogue. So happy to answer any questions you guys have as we go along. And then the other question I always ask is, what should one avoid doing to support the local ecosystem in the early stages? What activities are not effective that you, from your point of view?
Well, I think I'm going to give 2 things. The first and foremost is, I wrote down, you got to give to get. You got to be a go-giver. But so what do you avoid? Avoid taking. This is somewhere where you got to give a lot more than you take, especially early on. If I counted all the hours I've put into companies, it far surpasses the dollars amounts I've ever charged. And I think most people who are truly committed to the growth of an ecosystem will say that, is that it's a passion that you have to have for seeing people take their ideas to change the world. And that's a giving mentality, to steal from Bob Berg. It's a go-giver mentality. And I think along those lines, so to answer your question, to avoid taking from the ecosystem, the other thing that I would say is, I find a lot of ecosystems, and you want a bunch of people in the room, so you let everyone in the room. And I think something that's so important is getting the right people in the room. And I've been on both sides of that. I've put the wrong people in the room and the right people in the room. And I got to tell you, when you get the right people in the room, what gets done is exponentially faster and quicker than when you don't. And so that's such an important part, is to, avoid putting a room full of the wrong people, and avoid having people in the room who are just looking to take.
So Andrew asked the question, is this another way of saying, how do you get deal flow?
No, it's a good question, Andrew. I don't think it's just about deal flow, because I think it's more than that. And I think that at the end of the day, to have soil that's fertile, to use my garden analogy, you got to have some funding sources, because let's face it, in the angel or the VC world, what is it? It's less than 1% turn into what we really want them to. And we know that 90% of the businesses are going to fail, and everyone's looking for a win early on. I would argue that in sometimes in less mature markets, it's going to require a little bit more to get them going. And I think what will happen is that as you start to become, at least what I found is, as we started doing events, as we started connecting and bringing in the investors into the conversation, naturally what happens is that the deal flow will follow. It's going to happen naturally. That's a natural thing that you see happen in the ecosystems. You're seeing people pop up and saying, oh, we have all this great deal flow now. Well, I would bet it's because they took the time to really find the money, to really find the support for those companies, the professional service providers, and put the events together that led to more deals. I'll give you an example. When we did our events, and we were really successful, I believe, when we did ours, when we were able to bring the number up to somewhere around 35-40% of the room was investors, our deal flow naturally went up. Because people who have good ideas are very strategic in how they spend their time and want to be in the room with investors. And so when you have that, and you have the right people who can connect to investors, you started getting better deal flow. But I think that the deal flow kind of falls on itself. And I think if you look at, being in Detroit and, there's different raps about Detroit, but we've been able to have some really great people help put this ecosystem together, and some people put some capital behind it, and us have some resources, and we've been able to nurture some really good deal flow and have some unicorns come out of this market, multiple unicorns come out of this market, and I think it really goes back to some of the points I'm saying here.
That's great. And so what should local leaders do to support their early stage startup ecosystems?
Well, I think the most important thing is be a first customer to those companies. There's nothing better for traction than an early stage company being willing to give a beta program to a company. That logo looks huge. It creates some early revenue that's non-dilutive. If a leader could get some business in the door for these companies, to me, that to me is number one. I think directly behind that is that social capital goes a long way. When you talk about leaders tend to have a lot of social capital. And so them being able to bring their social capital, whether it be in the form of bringing people who are willing to invest, or whether it be people who are willing to come speak that the people otherwise wouldn't be able to hear speak, or other strategic partnerships that wouldn't normally happen, that's where the real value is. Some people take for granted that they can go to dinner, call someone's cell phone, take someone golfing. That resource, that connection is invaluable to certain entrepreneurs and to certain early founders. And so the ability to be able to have that is such a huge thing that I think sometimes as leaders, we just think, well, if we don't put an investor in the room, it's not going to help out. Yeah, that's important, but there's a lot of other ways and a lot of other resources that leaders, especially leaders in organizations and companies, control that could be of a lot of value to these early stage companies.
Great. Well, Andrew asked the question, if you were setting up in a new town as an angel, how would you get into the existing infrastructure in a positive way?
That's a great question. I keep going back to being a go-giver. I would do a lot of listening. We have 2 ears and 1 mouth, and I'd probably, if I had to put a plan together, I'd probably spend the first 3 to 6 months just showing up and listening and asking questions and not telling anyone I'm looking to invest or anything, but just try to get a feel for a lay of the land. A lot of people make the assumption when they show up to a market or a region, from my experience, that they're going to fix it, or it's broken, or they're the white knight. And sure, that is the case, but each ecosystem is a little different and is in its own right, kind of thriving on its own. And so really understanding what is already working and what's not is a first step, and also who's already in the ecosystem. Some people are pretty protective of what they have or don't have. And so setting up an event that competes with someone may be a kiss of death. Whereas, that you try to figure out what's missing when you do that. Okay, that money, ideas, support, professional services, and events, and start to look at the ecosystem and really try to figure that out. And I think really listening to figure out what the needs are would be the first step, and talking a lot to the entrepreneurs. And I think really challenging them. They're all going to say, what do you need? They're going to all say money. Right? Every business needs money. Get them past that to what else do they need? Do they need better talent? Do they need access to professional services? Do they need contacts for beta customers? Figure out what is the need, and you can go from there. I think COVID has really changed the game. I think the ecosystems have gone from being regional in nature to expanding. I know we're getting ready to do an event right now with another ecosystem, and we're bringing all the parties together this week. And so for 2 days of events. And I think that, just as more and more that's happening, both in person and virtually, it's taught us that sometimes the resources don't have to be sitting in the block over from you or in the city that you're in, but people are willing to do things in different cities to help those ecosystems.
Great. And so what are some best practices that local leaders should do to foster the ongoing ecosystem?
So it's a good question. What are some practices that local leaders can follow? I think one thing is having a long-term commitment to entrepreneurship. Starting a business, growing a business and harvesting an investment, that doesn't happen in days or weeks or months or even years. As you know, it can take 5-7 years for a business to really get going. And most overnight successes were 3 to 5 years in the making. And I think that when a leader says we're committed to entrepreneurship, or we want to help support this angel investing initiative, or we want to support this venture capital investing initiative, that really needs to be done on a long-term basis. It can't just be for the term of one political office or someone used to get nominated or someone who's one time leading an organization, but how do you make that a legacy project that carries forward? Because it takes time to build. And I think that's one of the things is people come in, they sponsor something for a year and they say, I didn't get a result, and they leave. that's a little unrealistic. So I think that's a really important best practice, is to stay committed, and from the top down, push this incentive. There's initiative. And so just because someone at the C level is interested, or just because a business owner is interested, make sure that the rest of the organization understands why it's important. It may not be that, hey, we're looking to invest in a company. It may be that the byproduct of this ecosystem is really great talent that, unfortunately, when their business fails, they're going to be looking for a job, and that's a pretty good candidate to work with us. And so, not that you want businesses to fail, we want them all to succeed, but let's just use statistical numbers. Not all of them are going to make it. And so making sure the purpose behind why the company or the business is getting involved, or why the leader is getting involved, I think that's a second thing that I would say is important. And I think the third part is that leaders need to be committed to making an investment. Now, it's not always money, it's time, it's money, and it's energy. And so those have to be there. And so I think when I think of a third one, there has to be an investment. You can't expect to have something worth a bunch of money if it wasn't invested in. And so you can't have an entrepreneurial ecosystem that's going to attract good talent, that's going to attract, great companies, that's going to attract, all the things that come with having the office space and all of that comes with having an ecosystem, if you're not investing in it. And I think, you see that. You see the communities where a leader came in and invested in a co-work space, or built out office building for early stage companies. It took time, but over time, if the people stayed committed to it, and there was a long-term commitment, and they were able to get people who would invest resources, then it would ultimately be a situation where over time, you start to see the nurturing take place and the ecosystem really mature and grow.
Great. One of the things I did early on with Austin was I was trying to find where the startup ecosystem was, and I really couldn't find a good website that told me where the groups were. So I built one, and I just captured every investor I met, every group, every service provider, every incubator, accelerator, workshop, meetup, whatever I could find that was relevant. I put it on a list, and I had over 100 links at one point in it. And it was all in one place, and called it the Austin Entrepreneur Resource, and fostered that for many years to promote the idea that you can find the resource that you need. And then as an investor, it was a little bit self-serving, that I didn't want people calling me up asking where this was. I would want them to just go look on the resource page for all those other resources out there that were non-funding. And so it really helps build the system if you can show people where it actually is. This is for the early stage ones, of course.
I think two things you said. One is you said you came to it and saw what was missing, and that now you created value for the ecosystem, right? Which is what the answer is the one question. And the other thing is, I don't know if you realize, use the word foster, right? And you foster is to help nurture, to help grow. And when you do those kind of things, I mean, and as you know, I'm a huge fan of you and huge fan of what's been done in Austin and just what's going on down there. And I think that what your actions are and what you've done with your network is living proof of how you help an ecosystem really mature up by nurturing it in those areas.
Right. And the other thing we did, we started meetups to try to connect people together. If you read up about entrepreneur ecosystems, they really require interactions. People have to come together to get the benefits of these things. And if you have interesting meetups and keynote speakers and workshops and hackathons and things that just bring people together on a regular basis, it keeps people on track and on focus, and shows that they're not alone. There are other people here, and the interactions are what create some of the magic out there. What have you done in those areas before? I believe you've done quite a bit, but can you tell us about some of the interactions you've been creating?
Yeah, so it's I could not agree more. I think the in-person interaction is so important. So I've done a monthly event called the Pitch Club. We did that for 4 years straight. We did a couple in collaboration with you, and pre-COVID, it was a great event that really just allowed people to network and to connect with other resources, right? I always use the word resources because it's not just money. It's time, money, energy, it's different connections. And I found those to be tremendously valuable. If you can get someone to put a little money and give one of the big checks away, it always makes attendance go up. That's one little tip that I found. And it could be even $500 or $1,000. I know it doesn't seem like a lot, but you'll at least get some more people out. We had some groups in our ecosystem that did $5,000 checks, and those tended to get some really good companies coming out. At the end of the day, is it worth driving and making a pitch for 5 minutes to win $5,000? Most entrepreneurs would say yes. And so you'd get some pretty good entrepreneurs coming out. And so, that's one thing we did during COVID. We switched to a virtual, and we did much more of it wasn't as much of a pitch competition because I saw a lot of those going on. We really focused on having a mastermind, more of a peer group for entrepreneurial organizations. And so that went really, really well. We've done those events as well. Over the years, I've always done lunch and learns or sunrise series kind of webinars. Pre-COVID, people always liked in person more. But I think the programming at co-working spaces and other entrepreneurial type venues is such an important part. And I think just to reiterate, I think the leaders will take for granted the fact that they can call someone up and ask them to lunch or get them on the phone. And there are 100 entrepreneurs that would die to have a conversation. I remember one event I went to was a very successful entrepreneur, and they got him to come speak. So one of the leaders got him to come speak, and the room was just packed. I've never seen a room quite fill like that. And I really learned a lesson early on that you want to get those people who they don't get to hear all the time, because those people have a lot to say that's very interesting. And I think that really helps that when you can get someone like that, if you can get someone at the front of the room or be giving away a check at the front of the room, you get the right people out, and then you really get them interacting. And I would say the last part is an intentional interaction. A lot of people will just put out, food, drink, and say, network for 30 minutes beforehand. If you can actually do things, we used to actually identify, okay, who in the room is an investor? Who in the room is an entrepreneur? Raise your hand. Who in the room is a professional service provider? They tended to run away from the professional service providers and run to the investors. But the point is you were intentional about connecting people. So it wasn't just the person who's the best at working the room, but everyone was connecting and really intentionally getting the right people together to make relationships actually happen that are meaningful.
Great. Well, those in the audience, if you want to unmute and turn on your video, happy to take questions directly if you like. And while you're doing that, my thesis has always been in growing entrepreneur ecosystems is that you should build on successful serial entrepreneurs. Go find who the successful ones are, and then we're going to build on top of that. And I was called into Nebraska once, and I asked, now, who is successful here? And I was expecting to hear farming and ag tech and so forth. What I heard instead was back office software for insurance companies. And I thought, oh, that's interesting. I would not have guessed that. And they had a small mini cluster of companies that were building back office software for insurance. And of course, you trade employees and you trade skills, and people come from the same company and go out and they start related businesses in other areas and so forth. So you get a little bit of a micro cluster going. And so that's been my thesis. What's your reaction to that, Michael?
I think it makes a ton of sense. The people who are serial entrepreneurs, they're not going to leave to go do something else unless they retire, quote unquote, right? They're going to stay doing that. And I think if you can find those people, it's a really, those people are the drivers, right? They're usually well connected. They usually have an altruistic purpose for doing some of what they do, and they can definitely help be connectors. I think that is an absolutely great thing. One thing I would say is, and I'm going to speak on both sides of my mouth when I say this, is that it's good to get a niche group or get a group of people who are already working together when you can. And if possible, I like to get a really diverse audience going. That's always not easy, right? So early on, you probably need to be a little more focused. Like you said, let me find the people who are back office insurance companies and stick with them. And then we'll go 1 degree out. What I've always found is that's how you need to start. And then as soon as you can, how do you get multiple industries in there? How do you get multiple different segments in there? Because I think the ability to get that diverse mind of thinking contributes to the overall growth and maturity of the organization or the ecosystem.
Right. You touched on a key point a few moments ago about, entrepreneurs coming out to meet successful entrepreneurs, those who have done well and so forth. And I find that that's part of it, as well as having a star power, behind the program. There's some star that's there. And whenever I talk to, the stars in Austin, I find they always want to help the ecosystem. They just don't have time to go put together accelerator programs and incubators. And so one strategy is to go in and build the accelerator incubator programs and just have the successful entrepreneur be the face of it, the name of it, and they stand and wave and attract more people to it. But they really don't have to do any of the heavy lifting that goes on behind the scenes, because they don't have time for all of that, of course. So that's just some thoughts there. Have you ever done anything in that direction, Michael?
I've not personally used that, but I've definitely seen people who would come to an ecosystem, even different parts of the Michigan ecosystem and the Midwest ecosystem, and they would find that key person, that key influencer, have them be the face of the organization or the program or the event. And that tended to be what was needed to kind of really get it off the ground. I would agree. I think that's a great strategy.
Great. Well, thank you. Any of you guys want to ask a question, unmute and show your video and turn it into a dialogue?
Yeah, sure. I do have a question. I'm sorry about the video. I currently don't have a camera right now. So my apologies for that one. So I wanted to ask you, given my experience on an accelerator, right? I have partnered with one for now like 10 months since we started. And I've seen a lot of syndicates come and go and make different type of ticket investments, ranging from a small investment as 50K up to 1 and 2 million on early stage venture capital companies. So I wanted to ask, at which point would you draw a threshold for an angel investor or an angel group not being as feasible for a company to receive an investment from and deciding to actually get an investment from a venture capital fund, for example? What would you consider a threshold, or where would you draw the line?
Are you asking from like a dollar amount? I guess, could you maybe try rephrasing your question?
Yeah, so more into the size of the company, not really the investment size. So will you invest, let's say, has an individual angel investor in a company that's currently raising, I don't know, let's say $50 million, and do you think they actually gonna take your investment because other than the money amount that you may be able to deploy, you as an angel investor could provide some additional value? Or is it too much of a big company at that point?
I got it. That makes sense. So if I make sure I'm going to rephrase it. So as an angel investor, is there a threshold when you wouldn't make the investment because your investment in your ability to influence the company is diminished?
Exactly.
Yes. Yeah. I don't know if I could give a dollar amount because I think it really depends by region and type of company. You know, I happen to have a few clients who sit on the investor side, and we'll often talk about that. And is that, when do we make the investment, or what do we do for the investment? In my personal decisions, I'm like, do I want to be passive or do I want to be active? Some people only want to be active and know that they can bring value add to their investment. So I think it really depends on the offering. You know, I don't think I could say to you, hey, 25,000 or 100,000 or $1 million, that, you know, that's a threshold as an angel investor. I think it totally depends, because what an angel investor is in the Midwest is different than it is on the coast. And I think also each of the deals is a little bit different, but I think that's where it's important to make sure you know, what is the side letter you look with? Are you getting an advisor agreement along with your investment? I think there's other things to look at as an angel investor when making those decisions. You know, some people say, I just want to write my check and sit back. You know, I trust the management team. I've had other ones where I've advised the client not to take the money because the investor wanted to come in and basically run the company. And that's not what they were looking for. And so I think it really, really does depend on a case-by-case situation. Hall, I don't know what your experience has been around that.
Yeah, mine goes more toward the numbers of it. When the revenue gets above $5 million, or the fundraise gets above $5 million, I should say, I find that starts to get hard for angels to engage. It's just too many investors that, you know, you really have to move to venture capital at the $5 million mark and above. And then angels are early stage investors. And so when the pre-money gets too far past $10 million, I find angels start to lose interest in that. And so those are the two thresholds where I think it starts to pass into the venture capital world. And whether the company has $1 million or $5 or $10 million of revenue, you know, it can vary, but those are the two trigger points. Because I remember as an angel investor, they come to us for 500K. We write our, 10 of us write our 50K check. We're in it. They come back 12 months later. Okay, I'm ready for my $5 million check. We look at each other saying, well, I don't have $5 million. Do you have $5 million? I don't. And so you quickly can grow out of your range, and usually it's on pre-money, and it's on the amount of money that they're raising that it just starts to get to be too much for angels. I have had angels raise $20 million, or starts raise money from angels at $20 million, but they literally talked to every angel group in North America and Europe to get it. And so there's some outlier cases, but the vast majority are not going to do that. When it's time to go to venture capital or to bigger funds, well, it becomes clear that angel groups just cannot support it anymore.
Perfect. Thank you so much. And a follow-up question on that. So recently we started launching a crossover fund, right? We have always been in the capital markets, but recently became very interested in private investments and are moving our fund into a crossover. And we have seen a lot of companies getting initially funded by angel investors, particularly those in the biotech and healthcare side. And of course, when a fund like us steps in, we usually just want to buy any other investor out, right? We really it's not that we want control, but we want more either a direct relation with the company alone, or we just want another fund that's basically a specialized factor fund like us to get involved. So my question would be, do angel investors and angel groups, including syndicates, actually look for that as an exit opportunity, or do you guys are focusing on another type of exit? What's the point where you withdraw your cash out?
Mine would be, if we're getting in for the longer term. Our exit's usually not, will someone else take out our position? That's not been, at least my experience with the ones I've had. I don't know what your experience has been with angels, but they're usually not just trying to get out at the next round.
Yeah, I find most angels want to get out at the 5 to 7 year mark. So if it's 5 years or 7 years, and they've been in it for a long time, and we're going to get a 3 to 5x return, they might go ahead and take the buyout at that point, because some VC funds want to clean up the cap table and buy you out. And if it's a meaningful buyout, I think some investors will take that. If you've been there for 3 or 4 years, well, typically they want to go further and they want to get a 10x return because the potential is there. So they want to stay in for the long haul. Sometimes the follow-on investor doesn't give the angel the choice. They tell you, here's what you get. The rule of minority in investing is it's whatever the majority investor says it is. So you sometimes don't get the control over that. Things just happen the way follow-on funding goes. So it's a bit of everything there is what I've seen.
Would agree.
Okay, perfect. Thank you so much for the insight.
Great. Anybody else have a question?
No questions, but hello, Hal. How you doing?
Hey, thanks for joining.
Yes,
You're listed
yes.
as me on the screen there, so
Yeah.
just wanted to check and see.
Let me ask, Hector. Are you Hector from Europe from Parallel team?
Yeah.
Great,
That's
great.
me.
Oh, awesome, great. I'm from Puerto Rico myself, and I was CTO at GFR Media.
Awesome.
So good.
I'm not a local. That's good to see.
That's right. That's right. Good.
That's great. That's great. Cool. So do anybody else have any questions about working with ecosystems? It sounds like you guys have growing entrepreneur ecosystems there, and they're coming up. One of the things I found that was very helpful in growing those systems was identifying what resources you're missing. When you catalog the resources and then you catalog the startups that you had, you can see that there are gaps. We don't have a resource for everything that's there as far as meetups or what have you. And so one of the things I found is people say, well, I need to go start something. And what I found in today's entrepreneur ecosystem around the world is that just about anything you want has already been developed. You don't have to reinvent the wheel. All you have to do is recruit it. Just have them come down. Hey, I'll give you an office space. I'll give you a mailing list. I'll give you a support person. Come in here and start running meetings and sharing expertise and coaching and so forth. And we'll make it easy for you to do that. And so if you have a central place where a lot of the entrepreneur ecosystem goes, that's the place where you want to put it. But actively recruit resources to come in, because they want to go as far as they can, and they'll go to where they're most welcome, and they feel like there's a real need for their service, whether it be impact investing or it be consumer product good investing or what have you. You'll find that there's a wealth of programs, incubators, accelerators, and others that you can recruit. But the key is to know what to recruit. You can't recruit everything in the startup world, and you need to kind of know exactly what you're building and what your entrepreneurs want to build, and then you go foster that.
Absolutely.
Cool. Andrew, did you have any other questions? Cool.
Maybe on
Well,
mute. Yeah.
Well, good. Well, I think we answered the questions here. Michael, what else did you want to share at this point?
I first, I want to thank you guys again for the opportunity to speak. And I think it sounds like we have some people that have emerging entrepreneurial ecosystems. And I think I want to thank you for being passionate about it and seeing the vision for what it can and does do for a community. So a lot of credit to that. And I think I would just say that it is a long journey, but a fun journey and a very rewarding journey. And know that there's people like myself and Hall out there. If you ever have any questions, obviously don't hesitate to reach out. And, one thing that if you haven't heard me say enough times, it's about go giving. And, Hall talked about how can he create, resources and help people. I think you'll be shocked at how quickly someone's ready to answer your phone. I can tell you over the years, I lost track of the numbers, but it's got to be in the thousands now of phone calls I've had over the last, 10 years with people. There was very few people who said no to taking a phone call. Not many were quick to write a check, I will tell you, but they were usually open to taking the phone call and giving insight or wisdom. And most people, remember, by nature, we like to help. They're always open to make an introduction. And so even if someone's not going to give you what your ask is, don't be afraid to ask them, hey, well, I noticed Shane, can you introduce me to Shane? And I found 8 times out of 10, you'd get the introduction. And I've used that to get all the way up to some of the most, prominent and powerful people, I think, at least in America, in my network, just by doing that of, hey, I noticed you were associated with so-and-so, could you make the introduction?
That's good advice. And I want to thank you guys for joining us today. Michael, I want to thank you as well for giving us your wisdom here for many years of work in the Michigan market as well. Shane, what else we need to cover at this point?
No, that about covers it. It was a great session here. I'm hoping that everyone who did attend got some good information out of it. And, we thank Michael again for stepping in here and really helping out. Like I said, we're going to have Gary Trauner from Silicon Couloir come back and give his session either in August or September. So be on the lookout for that. He's going to do, we'll call it part 2 of how an angel group should support its local entrepreneur ecosystem. But Michael, thank you so much for coming out. And if anybody else has any closing words, I think that should wrap it up, though.
Awesome. Thank you so much.
Thank you.
All right, guys. Thanks so much.
Thank
See
you for
you
your
next
time.
time. Have a good one.
Bye.
Appreciate it.
Thank you, guys.
Bye-bye.